What's going on, guys? Mike here, and today I just want to have a quick video because I had some friends messaging me about, it's like a massive red day, multiple stocks, negative plus 2%, and what was kind of going on. So I mentioned in my last video, which again I'll link right here, that we were kind of heading into a pivotal week where a lot of the big players were going to start releasing their earnings from Q1 of 2023. So that would include, Microsoft, Google, Amazon, and so on and so forth. Like I said, I wanted to do this really quick video to just kind of reiterate that this is expected. These earnings weeks somewhat are a little bit more volatility, or have a little bit more volatility than normal. So we're just going to quickly go over this, right? So we basically had Microsoft, it was on a downward trend all day today, anywhere between 2.25%. Earnings came out. Obviously, you can see here the after hours trading spiked right up. They went up 4.83% currently at this time. So if you look at like their earnings here, they ended up pulling in 52 billion versus the expected 51. So their earnings per share were 2.45 compared to the 2.23 that was expected. So again, markets typically always do the opposite of what you're actually expecting, right? So same thing with Google, downward trend, 2% today and shot up near 4% after hours trading here. Again, their returns came in. Their actual for the earnings per share is 1.17 compared to the expected being 1.08, and I think they ended up doing a stock buyback. Yes, Google here, stock rose as much as 5% after hours for the stock buyback. So again, this is the more volatility of the weeks that we have throughout a year is when we have these earning reports. So for all of you new investors out there, this is expected. We need to just kind of ride the waves and kind of just see where she goes, right? So one thing I also do want to highlight is I kind of mentioned again in one of my last videos that I did, Choice Properties REIT was releasing their earnings report this week. So I just kind of going to quickly highlight this because I personally invest in a few real estate REITs, being Plaza REIT, the other one being Smart Centers, and RioCan. So I kind of like looking at other REITs just to kind of see, how things are kind of comparing, right? So you can see they released their earnings report. They increased in some properties over the course of Q1, but let's see here, their income actually went down. Now, again, I'm pretty sure this is because of the depreciation that can get factored into the net income on REITs. So I think they're kind of taking a bit more of a loss on the devaluation of their properties throughout their portfolio, because when you look at this, their FFO came in at zero. So FFO, for those of you who don't know, is funds from operation, and it came in at 0.244 compared to last quarter of 2022 being 0.242. So that is a slight increase from funds from operation, as well as you can see here that their actual payout ratio of their dividend is slightly gone down, which is a positive as well. So again, this is kind of what I was expecting to see with the real estate kind of environment, where we're not probably going to be seeing too many large gains, but what I'm hoping to see is, I guess, sustainability, right? So this is kind of showing me that they are kind of staying within their means, paying out their monthly rent, but they're not necessarily getting a lot more for capital investments, right? So the other thing to kind of realize here as well is that in comparison to other real estate REITs, their average maturity rate on their mortgages is actually six years, which is actually one of the highest I've seen, as well as being in that 4 percentile. So if you're investing into other REITs, we could probably assume that we should get similar results to other real estate REITs that have these kind of same numbers, right? They're kind of being not necessarily affected by the higher interest rates because their average is already in and around where the mortgage rates are today. So like I said, I own like Plaza REIT, and I'm pretty sure their average was, I think, 4 years and around that 4% as well. So Plaza REIT, which I did a video on them as well, their earnings report I think is coming out May 4th. So I'll definitely be reviewing that in more detail, like a dedicated video to that specific earnings report, just because I personally invest in that one. So I'll share with what I see in that one specifically as well. Other than that, I hope you guys found this useful. This was just, like I said, a very quick video just to kind of highlight, the volatility in today's market. And I hope it kind of just, puts a little bit of at ease for some people if they were concerned that their portfolio was on a downward trend. So hope that was helpful, and we'll see you guys in the next one.